Hi traders, thanks for joining this live webinar. Good to see you. And we're going to dive into the entry and exit tactics for the Forex market. We'll take a look at some commodities and stock indices. And before we dive into today's live market action, price action, first of all, be aware of these disclaimers. The webinar is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more details. Also, please be aware that trading foreign exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Alrighty. This Thursday, one of the things, of course, you have to be aware of is news events, is data releases. And one of the things that is coming up this week are a couple of interest rates, euro for instance, and of course also Australia already happened. And we have, amongst others, besides that, of course, the UK elections, for instance, on Thursday. For more information on that, I would like to point to this page. You can find the link at the top. If you go to any Admiral Markets page, at the top you'll see here, find out everything you need to know UK general elections. So just click on that and that will bring you to this page. Here you see stats, graphs, webinars, articles, etc. So to get more info on that, check it out here. All right. Now, regarding the calendar, you can check that out also, of course, by going to analytics and clicking on calendar. There you can check out analysis as well, like my wave analysis earlier this morning. You can see what I'm thinking about the pound, but also the euro dollar and dollar yen. And if you're interested in other things like, for instance, the platforms, the MetaTrader 4 Supreme Edition, or opening a demo, you can use these tabs, start trading, and products. You can check out volatility protection. All right, that's a quick introduction to Admiral Markets. Basically, if you're new in here, please feel free to use the chat and communicate, ask me questions. That's why we're here. I'm going to take a look at the platform right now. Take a look and see what's going on with price. We can start with the euro dollar. Good evening, Raj. Good evening, Bando. Good to see you both. And let's take a look. Price is still not broken above 113. Still facing this kind of key level, in my opinion. And this is already multiple attempts. This is the first attempt. This is the second in a way. We are still kind of within that second or perhaps even the third attempt right now. So as the euro dollar keeps knocking on the doors of resistance, I think that the chances of this breaking do increase. But because it is such a strong level, I personally would be waiting for a daily candle to break through that level. When you look at the daily chart, though, you can see why it's such a strong level. First of all, let me move this mini terminal right just a bit lower. You see lots of tops here, historical, strong level. And it is not only a strong level, but it is an invalidation level from a wave perspective. So if it pushes through 113, technically it is not a bearish wave count in the sense that this is a wave 1-2 perhaps. So it's starting to look more and more that is possible and likely in fact. But for me to trade it, I'll be waiting for this level right here. Let me make that red. On a daily chart, like this, a daily candle with the close near the high and a close above the 113, pushing through this level. It's a bit boring maybe, but conservative perhaps, but considering the strength of that level, that's what I want to see before I would be trading it myself. Because if I trade it right here, I'm not sure. It could go up to 10, 20 pips, but it's facing that strong level. So I think that it's, from my point of view, it's not interesting. Now, granted, it is maybe the third attempt, so the chances of a breakout are increasing. Looking at weekly candle, monthly candle, there's a good chance of that. So maybe more risk seekers would try to attempt a breakout here, or actually before the breakout, I should say. Even then, I would probably rather wait for a tiny pullback to at least a pivot point. Let's take a look at the hourly chart. It's kind of in a triangle at this moment. So it would be good if we could get back to 112, 125, 112.20, 112, and then try to get a bounce off that support level, and then see if it then the next turn could break. So what I mean is this: see if there's a retracement, try to grab a bounce here. If it bounces, some candlestick patterns there perhaps, grab the bounce and hope that this time it will break above that 113. The other solution could be to wait for the daily candle to break above it, look for a bit of a pullback after day after, and look for continuation like that. So that's kind of the bullish scenario. If it does break below the weekly pivot point, then I would personally be looking for a break, bear flag, and continuation. So this is what I want to see. This is not me. Let's say this is not me trading what I think, but this is trading what I could see in the future. And let's see if that happens. All right. So I want to see. This is my reading of the market structure, and this is my game plan, my trading plan based on that market structure. So as price action develops, I might change that at a certain moment when there's enough information that changes this scenario, changes this structure. All right, there's always like if-then process. If you have that kind of if-then in your analysis, that means that you're already using some sort of market structure and you're on the right path, in my view, at least, in terms of market, in terms of discretionary analysis. Alrighty. If today does not, if today fails to break, we will have a fractal. That would be a first clue that there's some reaction on the daily chart to the 113 level. But for a reversal trade, I would probably need to see either price break below this pivot point, as I already said, or I would probably need to see, let me count quickly. Let's see, I'm counting quickly how many candles I would like to see. Probably 5 to 6 days. Sorry, I hit the wrong button here. What's happening? All right, sorry about that. 5 to 6 days not breaking this high on the daily chart. If 5 to 6 days this price goes sideways, this is day 2. So another, let's say a day 3, a day 4, a day 5 / day 6. If it stays between 112 and 113, in that case, I think a reversal is starting to become more likely without necessarily price breaking through or below the weekly pivot point, that green level. All right, so that's another factor that I'm including with my analysis. So there's 3 things: bullish breakout, bullish bounce at PVP, bearish breakout below PP, or if there's a sideways move for 5 to 6 days, then I think there's actually a larger chance of a reversal and price to move lower from here. All right, so those are kind of the 4 main things that I'm thinking about. All right, let's move on. And dollar yen. Anyone who looked at my video, I think, and wave analysis knew that I was looking at a wave 5 here, indicating that price should stop at this fib, and indeed price stopped at the 38.2 fib. All right, like this. There we go. 38.2 fib bounce, very, very close. Just missed it by a few pips. I would consider that a bounce, and 38 and weekly pivot point, nice confluence, and indeed price stopping at that level, going sideways, then breaking and going lower. So that was a good trade. Anyone caught that trade by any chance? If you did, great job. Maybe anywhere up to 100 pips at this moment. And if not, no problem. Let's take a look at it right now. I think personally, considering, I would wait for this daily candle. This looks pretty strong at this moment. In the video, I said I'm actually looking for a bullish bounce as soon as price gets to 109.50, as soon as I see a reaction at 109.50. So far, I'm not seeing it. So one thing has happened. We got the bounce at roughly around 110.70, and we got a bearish bounce and bearish break, and the target has been hit, which was 109.50. So that's done with, right? Next thing I said is the potential bullish bounce that I was interested in. So basically, what I was thinking is actually a reversal from this level. And the reason is simply because, from my perspective, this is starting to look like a correction. This is momentum. So I know that's a bit shaky because of the fact that all in all, the weekly is in a channel like this. All right, so you got to be aware of that. That is a bit risky from that perspective. Also, the monthly, there's a resistance level. Let me get rid of some of these pivots. Some of these fibs. All right. Good. So a bit shaky because of the fact, yes. Now I need orange. Sorry for that. Let's move. All right. Good. So yes, daily chart knocking on resistance, weekly 2, like this. So there's definitely support too, though. Of course, we have to realize. Let me just leave it orange for the moment. All right, there we go. So this could be a bouncing spot, but price could break. If it does break, yeah, we know that there's a good chance to fulfill kind of that move down to the bottom of that triangle. So either this is going to be a bouncing spot, or if it does break, there's some space to the bigger triangle. So is this kind of a first move correction for more upside to the next resistance, or is this a retracement for more downside? Part of that answer will depend on how price responds to the 78 and 88.6 fib at 109.50, 108.80. So what I'm doing is, because I'm not sure if which one will happen, I don't have a crystal ball. I will keep an eye on how either candlesticks form at this level. That's my crystal ball in a way. So, obviously, wave analysis at this moment is kind of giving a favorite to a bounce, but wave analysis is not a guaranteed thing, and that's why I want to see confirmation. That's why I'd like to see some candlestick pattern, bullish engulfing twins, a pin bar, anything at the 78 or 88.6 fib, a candlestick pattern that shows me that there is a response, kind of a bounce and a turn. So that could be, as I said, engulfing twins. So at the moment, I don't see that because this is still a decent follow-up, decent continuation candle within this bearish momentum. All right, so let's see. I think that from a wave perspective, there's a good chance, but I'll wait for that. At this moment, I think that this could be completing an ABC zigzag, and if there is a good candlestick pattern, I think there's a good chance for price to at least test the resistance, and there's a good reward to risk. So that could be a very interesting trade. The stop loss could be just below the candle pattern, entry after the candle pattern, which gives a small risk basically, and a decent potential reward. So that's an interesting reward to risk ratio right there. One thing though I want to keep an eye on is this daily candle, because if the daily candle is bearish like this with a close near the low, in that case I won't even be looking tomorrow for a bounce to the upside. I will totally cancel the whole idea, because in that case, actually this candle, today's candle, if it is this bearish as it looks now and it closes at the end of the day just like it is now or similar to it, then actually I think there's a good chance for price to get to the 88.6 fib, because a candle like that is not showing any bounce, not showing any weakness. It's actually showing continuation. So what I would expect is actually a bearish follow through. So I might even switch my hats tomorrow, and if I see a candle like that, wait for some bear flag on the hourly chart and trade that break down to the 88.6 fib. So I might flip it and actually trade with that momentum towards the next fib, and you know, but that's tomorrow, depending on today's candle. If today's candle has a big wick, that means that there will probably have been some kind of a reaction like this, right, which will cause that wick today. Tomorrow we might see a retracement of that wick and then a subsequent bounce the same day or soon after. So on a 4-hour and hourly chart, it will look like this, up, down, up. On a daily chart, it will look like this. Wick, the next day wick, but then probably a bullish candle, like that. So on a 4-hour chart, that up, down, up will create bearish candle with wick, bullish candle with small wick. I'm just, this doesn't have to be like this, obviously, just that this is fitting, just multiple time frames together. So let's see if that happens. And then today, I guess I will know regarding the daily candle. Regarding the 4-hour candle, that will be a bit sooner. Let's see if there's a reaction here. If there's a bullish reaction, but the daily candle is still bearish, I'm also out of that trade, by the way. If there's a bullish candlestick pattern, but the daily candle has a wick, then I'm staying in, because then I think there should be more upside. All right, so that's it regarding dollar yen. Pound is has broken above this triangle. I can take that away then, and could be just waiting for that election and the result of that election, maybe Friday morning early, Friday night, or Thursday night, Friday early morning, I should say. I think that it will depend, that the result in the UK will have some impact, I think. Because if the Conservatives win with a majority and there's no need for them to negotiate coalition, I would suspect that that would be good for the pound, and I think we should see some limited upside at first. And maybe an extension, if we see good candles, maybe an extension to 132.50. If there is a more, let's say, messy result and the opposition, primarily Labour, managed to gain more seats and block, in a way, the Conservatives of a majority, could be a bit more pound weakness. We might see the support trend line break or the consolidation break to the downside. So my wave analysis at this point is looking at a range, quite a choppy range, and I don't have any favorite at this moment, at this point in time, to be honest. This case, let's say I'm standing on the sidelines and just waiting for more info. I don't want to even speculate about, let's say, which direction is more likely. I'm not even interested in trading it at this moment. So from my perspective, I'm just waiting for the pound, at least, pound dollar here. So I suggest to move on, and let's take a look at some other crosses. Maybe we can just continue with this list that I have here. Take a look at the Aussie first of all. So break of this channel, break, pullback, continued, but without breaking this bottom. And we're seeing price right at resistance, actually, trying to break above it. I have not been a big fan of the Aussie, actually, for quite a while. I've been even removing it from the weekly video because price is going so long sideways, and it's again in the middle with the resistance level close by. but pretty strong momentum. So I'm not interested in this particular currency right now. Let's take a look at the Kiwi. Kiwi definitely strong momentum. Shows you the power of using the 144 EMA, two retracements, two continuations. Price is very far from that at this moment. This was a good retracement within the trend, maybe even here. Price is now really accelerating from that spot. So it seems not to be a good moment for that. I would probably personally wait for, let's see, if price could get into this zone right here, that would be sweet. If price can make kind of a retracement, that would be supply-demand zone. If price can make a three-wave correction, I would be interested in this zone for upside. So I'll keep an eye on that zone. The EMA I use for the long term is 144. And granted, anyone who thinks what's the difference with 150 or 200 or 100 is not so much, by the way. I totally agree with that, but it's just a number that I'm used to using. I like to use the fib sequence levels. So anything that is like connected to fibs, I like to use that. Fib targets, fib levels, fib retracements, and fib sequence levels for moving averages. So that's just something that after all those years I'm used to. But the difference with a 150 particularly will be small. With 200 SMA, I guess there will be some bigger difference. Ultimately, they will give roughly the same idea, of course, but that's the one I like. So retracement, I need a retracement on the Kiwi to trade it. On the 50-minute chart, maybe 5-minute chart, I'm not sure. There could be a continuation, but here too, it's making a new high. You know, the thing is that right here, this is a good pullback, or this is a good pullback, perhaps. Those are within a lower time frame, maybe, opportunities to scale in or take a continuation within that momentum, right? As price is breaking, you see this is momentum. So on a 5-minute chart, there are ways to kind of try to catch setups here as the momentum is breaking. But even that we don't have. All right, this channel we had last week on the chart. And the break to the upside. That could be a big break. Now approaching the next resistance trend line and the next top. So that could be a massive 1300. Let's see how price responds there. It already has broken this channel. But I would still be cautious. This could still be a correction flat like this. So very important to see how price responds to this level. This is good momentum. So if it does move down, I would be interested in a bounce somewhere around here, 1225, 1212, somewhere around there, if it moves down from here. If not, then I would be interested in the breakout to the upside. These lines from last week have lost significance. I keep the charts the same so that we can see if there's any analysis. We can see it from last week. This is a specific profile for the live webinars. but I'm not sure what those represented anymore, those lines. So I think a supply demand zone maybe here. I don't remember, so I don't want to speculate. Let's take those off. Euro yen at the moment. Looking at some couple of time frames here quickly with you. Couple of dojis and wicks. Price trying to break through the support level right now. And this could cause euro yen to fall. We see your dollar hesitating. Dollar yen is moving down. And if we put a fib like this, right, 121.60. Looks pretty bearish. Let me quickly add some fib targets here. All right, there we go. So this is level 1, 2, 3 using fib sequence levels. If you're not sure what it is, just keep in mind that the best zones are between, on the euro yen, between 4 and 5 and 5 and 6. So for price to get really into momentum, it would be good if it can break through the S2. For the moment, we're below the third though. I think that if it builds some kind of flag here like this, I would be interested in trading the break down to the fourth level. But I need to see some pattern here. Here you can see good bull flag, sorry, bear flag very clearly. So it would be good if I see something like that, or a rising wedge. Same thing, break could be very good on the euro yen. So that's the structure I'll be looking for on the euro yen. All right, that could be kind of the trigger, and then the break is the entry. The exit would be the fourth level plus the S2. There's confluence. And the secondary target could be the S3 plus the sixth target. 1, 2, 3, 4, fifth, sorry. All right. Let's see. Last week we had a break of the bottom, then it did hit the target finally, but not at the moment that where I had this fib. And let's see. Price again hitting the 50 fib for the third time, bouncing again, going back to the resistance trend line we had on the chart, as you see. So using the 50, using the resistance, bouncing here, bouncing again, but the third time breaking. 1, 2, 3. So that breakout is approaching the 61.8 fib, which could be again a bouncing spot at the S2. So the 50 break happened, for instance, here you can see small triangle after that on the 50-minute chart. For me, I think it's probably better to wait for a 4-hour, let me go to that, 4-hour reaction on the 61.8. 4-hour candlestick probably, trading it, and it depends also on this daily candle. Same thing like the dollar yen. If it's a very strong candle, I would skip the bounce at the 61.8 fib. And in fact, I would consider even after bear flag continuation trades interesting down to the 78.6 fib. S&P 500 keeps pushing up. Quite amazing. Really shows you the power of the trend. On the hourly chart, let's see, slight correction here. Some divergence now, double divergence on the 4-hour chart. Single divergence, sorry. Well, at this moment, I don't see necessarily anything that eventually I think a reversal will happen, but who knows when and how far and when, how far it could push up before that happens. For the moment, this is a pretty good consolidation box. So if price gets down to S1, I think there's a good chance of a bounce again. This is not something I trade. I'm just analyzing this one, by the way. Oil, nothing new there. Still stuck between support and resistance. DAX, higher high. Not sure about DAX at this moment. Definitely pushing up. Let me check if there's a higher high here. 12,881. 12,872. Yeah, there is a higher high. So that keeps the trend up, the uptrend aligned, let's say. So from that point of view, with the uptrend still intact, the S1 could be a good bouncing spot. So let's see if there's any candlestick patterns at the S1. Alrighty. I'll put an arrow there as a reminder for myself. So yeah, those are some of the commodities, some of the indices, some of the major currency pairs and minor crosses or major crosses. Does anyone have a particular currency in mind that they think is interesting right now or soon? Anything that sparks your attention, let's say. Anything you want to ask? Anything that you want to share, like a analysis, a potential trade, a trade you're already in? Feel free to use the chat uh, for that and to communicate that with me. Swiss yen, that's an interesting one. We don't look at that one too often. We can do that. I'll just quickly look at this euro odd and getting a deep retracement. But all in all, the trend is still pretty much up. So I think that from a daily perspective, this still could be a retracement easily. Look at how the pivot points work, by the way. Break below it, move up to it, move down to S1. So it looks like it's in the support zone. Let's see if there's any reaction to the upside here. Okay, let's take a look at that Swiss yen. That's interesting. Any particular reason why the Swiss yen? Anything you want to share with us that that explains maybe why you want to take a look at this one? Let's take a look at higher time frames first. Very bullish candles in a row. It does look similar to Let's see, the euro dollar, actually, funny enough. It is quite bullish in the sense that this price action, but definitely strong resistance ahead. Yes, definitely agree with you on that, VT. It's kind of stalling right in front of that resistance. So that's why I think it looks like the euro dollar, because it's too right, good momentum, but strong resistance. So a couple of divergences between these tops, and there's a weakness as well here. So this is making things a bit more interesting for downside, actually, and a bounce, because we not only have double divergence on the 4-hour chart, but we have a weakness, and we have a head and shoulders here, and the neckline of that head and shoulders is actually this and this line. So price is challenging that neckline and the S1. So if there's a good 4-hour candle, I would like to see a small reaction here, maybe on the hourly chart even. Some kind of bear flag. Break of that bear flag could be interesting, because that could send this either right away or later on lower to the S2 as a reversal. These are weekly pivot points and more suitable for, let's say, intra-week. I mean, you could use it for intraday trading too. Then it might be good to have both daily and weekly to check both those time frames. If you are trading a bit longer, you might think about skipping the daily and only using the weekly, for instance. So it looks like a pretty interesting break or bounce spot. I think it looks more set up for a break, but after a correction, that would be the best. And I think then it could continue lower. This is 1, 2, 3, 4, 5, 6, 7th day is bearish. So it looks like this upside is over. In that case, at the minimum, price could be retracing this swing high, swing low, which is why I put the fib on it. So if it breaks below 23.6, it could move and start to fall against these fibs like that. And we could consider that, once that happens, we can consider this a double top. So some reversal potential in the air, but it also a lot depends on how price responds to the S1 and this trend line, because there could be a bounce too. So if there is a bounce, then this consolidation, I think, could continue. I mean a bounce in the sense that not the bear flag. If it's a mild correction like that, this is a corrective response. But if price starts to fly up like this, then start to make a bull flag, that's a bullish response. And in that case, a break of this support level to the downside is not as likely. Okay? Makes sense. So will price do this or this? Sorry, this, right? Or this, or even this. So in case it makes those red sideways move, I'm interested the most. Alrighty. On New Zealand, this is always an interesting one. Indeed. All right. We got this fib. Price did retrace to the 23.6 fib, which was a very shallow fib, as you can see. Did continue down to the target, though. Bounced off the target. Made it back to the bottom. That's what happened since we last left off, roughly. And generally speaking, price is at the bottom of this triangle on the weekly chart. So with that in mind, I think it's, again, a bouncing spot. We've had a correction like this. Seems like price could be in a corrective spot, right? We got a bullish engulfing twins. Now, not right at that zone, but I mean, this is a daily chart, so it's close enough, I think, for me. And on the 4-hour chart, the engulfing twins look like this, momentum correction. So this could be this in working. So on an hourly chart, we see bearish engulfing twins. There are a couple of options. One is wait for a bullish candle to break above the weekly pivot point. Wait for maybe one more lower low, but then a bullish reaction to that. Third option, wait for some triangle and a break to the upside. So I would be more bullish on the New Zealand just because it could correct deeper. And also, even though there's strong momentum, there's divergence between these bottoms. That's one thing. Plus, price is at the bottom of a daily triangle. So divergence, daily triangle, momentum on the lower time frame. I think there could be a larger correction like this on the New Zealand. Weekly daily triangle indeed. Divergence, let me see. Bearish engulfing twins, bullish engulfing twins. Yeah, that's about it. Alrighty, folks. Well, that are the currencies I had in mind. But if you still want to ask a question, feel free. In the meantime, though, we got a great lineup. Just a quick second here still before we wrap it up. I just wanted to make you aware of the fact that Nenet will have his session tomorrow. Then I will take a look at candlestick and fib patterns. That's Wednesday. Thursday, we take a look at trend trading. Friday, we take a look at the UK general election, taking a look at the results. Hopefully we'll know by then. We'll discuss some scenarios based on those results. So looking forward to that. Once again, you'll find all the info about the UK elections here. That could be your hub. But you'll also find more info about some of the tools I use, like the pivot point and the Keltner bands, right here with platforms, MetaTrader 4 Supreme Edition. And that's how you can try that out. Or feel free to open an account as well here. You get more info right there with Start Trading. I look forward to see you folks soon. Let's see, the market is from a 1 to 10 grade. I would say somewhere in the middle, not that great. I think 5-ish, maybe 4-ish. I think that could get better depending on how the dollar yen, euro dollar do, euro odd perhaps as well. So let's see the next few days. We'll be back tomorrow in any case, and see you soon. Cheers, everyone.